as we kind of, no, we have not quite got there yet, to emerge out of COVID, how's your business evolved?
Thank you, Rich. I think the COVID has really accelerated the adoption of online financial services. We've seen across different aspects, people actually moving there very, very fast. For example, we launched our virtual bank in Hong Kong in the middle of the third wave of COVID. The adoption has been fantastic. We see people moving there very fast. 70% of our new sign-up customers are between 20 to 40 years old, and almost more than half of them, actually, in fact, open a bank account with us where traditional banks are not in operating hours, like say, for example, between 6 p.m. to the following morning, right? So we've seen adoption there. In terms of online lending platform in Hong Kong, it's doing very well. I think we have a lead over traditional players, around a 70% lead, reflecting a lot of people not going to branches to borrow anymore, and they have opted to borrow from us online. So I think this is a very, very good time to roll out a digital bank and also online financial services.
Well, absolutely. And the thing is also with COVID around, people don't want to go to a branch, do they, I suppose, at the end of the day? But, you know, of course, when the people are immunized, who have herd immunity, then perhaps we'll see a bit of a move back into that sort of space. I'm sure you're prepared for that. So what are the advantages here of having a virtual bank, other than that very thing I just mentioned, over traditional?
I don't think even when things are back to normal, I doubt if it will ever move back to normal. I think in the new normal, I think people will not go back, right? I mean, just think about it. If you have bought movie tickets from your mobile phone, right, you're never going to queue up at a cinema to buy movie tickets anymore, right? So I think that is permanent, moving there. And once people have experienced the convenience, the new products, the way you can actually transfer money, buy things online seamlessly, right? I think that is a one-way street. Especially, right, what we've seen is young people where they have tried digital banking services or opened their first account with a digital bank. I think they will stay there for the long haul. We see a lot of interesting trends happening right now in this area.
Simon, we have China's draft laws requiring online companies to provide 30% of co-lending. How is that impacting WeLab?
So we, in our China business, where we have a 45 million users, we don't operate in that model. I think for people who operate with a co-lending model, it will actually increase the capital allocation required. For us, we actually provide technology services and help banks who are regulated by entities to lend efficiently. And that actually has not been affected. We've been working closer and closer with banks. I think with these incidents, I think smaller players will struggle because they need to invest in more capital, but larger players like banks, actually, I think they'll continue to flourish. I think it's quite positive news for us in a market where we want to grow and heavily invest.
So what you're saying is WeLab will not need to raise capital of any sort in the near future, is that right?
Not because of that regulation change, no. But I think in terms of growing the business, because we feel that we are so well positioned to take advantage of 2021 and the new opportunities, we always keep an open mind in terms of raising more capital.
Simon, we first talked nearly 5 years ago.
In Hong Kong.
Go on, Haslinda.
I was just going to follow up on the Hong Kong market. It is an overcrowded market. When we spoke to DBS Hong Kong CEO yesterday, he said that it's too early to talk about consolidation. But we have about, 155 traditional banks, 8 virtual banks. At some point, there will be consolidation. What's your take on that?
I think Hong Kong is it's a very big and profitable market, even though it's 7 million population. But if you look at like bankable asset per individual, right, per capita, right, it's probably the second largest in the world after Switzerland. In terms of competing banks, there are a lot of banks, but if you look at for where we operate, which is consumer banks, I think there's actually just a handful. And in particular, if you only count the good ones, right, I cannot count more than 5 very good ones, right. I think virtual bank introduced a new way to compete, and traditional banks are feeling the pressure. For example, even before virtual banks, the first virtual bank launched in Hong Kong, you see traditional banks actually reducing their minimum account balance fees, providing better online services. And I think that is actually good for the whole market.
Simon, we talked in March of 2016, so nearly 5 years ago. And at that stage, you were saying you were hoping to take, lending fully mobile, and I'm sure you've done that already. The thing is, do you now, as you've grown, need more capital? And if so, do you need to go to capital markets in the form of an IPO, perhaps?
I think there are a lot of interesting opportunities out there right now. In terms of raising capital, also it opened up a new different areas, right? From listing, we've seen SPACs happening in a lot of US players, private round financing. I think we keep open mind. We continue to explore them. I think this is going to be interesting for us in 2021 to see how we utilize different forms. We're constantly talking to different market players.
Well, absolutely. And you also, of course, have relationships with existing banks, do you not? And how are they, and how are those partnerships forming themselves?
I think those partnerships are going very well. We're looking at how do we work closer with them too, right? A new trend that we see in the market right now is the emergence of buy now, pay later, or online e-commerce buy now, pay later, right? Where individuals traditionally have to pay in full or use credit card, but buy now, pay later allow people to pay a small portion, let's say 30%, and the rest of the 70% pay back in installment in zero or no interest. With COVID, we've seen actually how that actually triggered the e-commerce adoption to increase, and a lot more people going towards that. And I think this is an area
Simon?
that fintech companies, traditional banks can work together.
Simon, very, very quickly, you hadn't had a default last time I talked to you. Have you had one now?
We've always had default, but I think it's a fraud loss. We were still very safe on the fraud side. We keep ourselves very, very safe with technology, with big data. We're able to weed out a lot of fraudulent applicants and customers, so we're still pretty good on the fraud side.
Simon, the final question. Can you continue to provide 4.5% rates for deposits as low as $1.30 USD?
I think okay. There are different ways to compete in the market. I think right now what we're looking at is what is the market rate. I think what we brought it down to is around 1%. This is where we're comfortable with in terms of getting deposit and compete in the long term. But I think once we launch and our virtual bank launch products like the lending part of it or the wealth management part of it, hopefully in this year and early part of next year, right? We can see ourselves the rate increasing again. I think that's what we hope to have a good balance of the demand and supply side of the balance sheet.